Continues here on the implications of the Brexit. That's the US market for you. Opening week, as was anticipated, it's a 500-point drop there as far as the Dow is concerned. Looks weak, mirroring the kind of move that we saw across the European markets. Let's continue to get reactions now. Joining us is a veteran of many boom and bust cycles, of many economic cycles. Deepak Parekh joins us here on CNBC TV 18. Mr. Parekh, appreciate you joining us on CNBC TV 18. It's a result that has surprised and certainly shocked most people. Everyone went in overnight thinking that it was going to be a Remain vote, but it's turned out to be a Brexit. Markets obviously panicking at the initial reaction. How do you see this playing itself out? Because it would be naive to imagine that after the initial, perhaps exaggerated move in the markets, things will stabilize fairly quickly.
I think things will stabilize very quickly. It is a little overreaction today in the global markets. Agreed, Great Britain will have a few issues, but I think the global economy will readjust very quickly. And I think India also, we went along with the sentiments around the world and we got impacted. As you said, the market came down and but the rupee came back. The market was down 1,000, it's recovered. So far as India is concerned, I think it's an overreaction. I don't see any problems of major outflows happening, or we may have to redo our trade agreements between UK and Europe separately. The issue really is for Great Britain. The other thing we must keep in mind is that it will take about 2 years to get the things undone. Whatever is, the agreements and legal agreements that are there in the European Union, the decision is a people's decision. The legal issues, the parliament approval and all that will follow across Europe between the European headquarters and Great Britain. So it's going to take 2 years for it to make a real impact. The Indian companies manufacturing in England may be impacted a bit because there may be trade barriers, there may be import duties put by the European countries over foreign goods. I don't think India has to be over worried. Fine, we will have to have two separate agreements, one with Great Britain and one with European Union.
Sure, the trade agreements is a separate story, Mr. Parekh, and as you pointed out, that's something that is going to have to be negotiated fairly lower down in the road. But let me ask you about the possible dislocation, specifically from a currency market perspective. Today, we have seen the Reserve Bank intervene in the currency market, but given the kind of pain and the readjustment that the currency market is expected, not just in India, but globally, what impact is it likely to have even as far as the Indian currency is concerned?
I think so far as the Indian currency concerned, I have not seen India in a stronger position than it is today. All macro fundamentals are exceptionally good, and our reserves are all-time high. Maybe 20, 30 paise rupee will adjust. If the rupee is overvalued, it will get to its level. I don't think it is significantly overvalued at this time. So you may see a little bit of blip, but I think we'll be able to win over it very confidently. I'm sure our economic position is so strong today, I don't think it's going to make any difference to India.
Okay, you feel fairly confident about the India story, Mr. Parekh. But let me also ask you what you anticipate now as the next steps from a central banker's position, because it seems certain that we are going to see an accommodative stance being adopted by central bankers around the world. Of course, we've heard from Mark Carney at the Bank of England saying that liquidity support will be provided if needed. The RBI governor in India has pretty much said the same. There is an expectation of a coordinated central bank response. What would you now expect in terms of next steps from a central banker's perspective?
I think central bank will be more liberal, will be more open, will be more flexible, because it is going to be a few weeks of tension, a few weeks of volatility in the forex markets, in the capital markets, as well as in the currency market. So the central banker will have to give a long rope by providing liquidity, by supporting the local currencies, and that is expected in any global crisis. It happened during Lehman crisis. It's happened during number of crises in the past. I don't think we should be over worried. I'm not at all. If you ask me, I'm not worried about the fallout. The impact is really in Great Britain, whether it is movement of people from Europe to England, jobs available in England now. Europeans can't work in England. The national health was overworked in Great Britain. Now, the impact really is between Europe and UK. Yes, there will be impact around the world, but it will be temporary. It will be short-lived, and various governments will do their own respective things. And please believe me, I think normalcy will return in a couple of weeks, even before that.
What are you basing your confidence on, Mr. Parekh? And you're absolutely right that perhaps it is wrong to extrapolate this to be a Lehman-like moment, because Lehman was about a financial crisis and this is nothing of the sort. But given the fact that this does put a question mark, and once again, we don't know how this will end, but it does put a question mark on the EU project or the future of the EU project. Don't you believe that this is going to be a slow-burning issue that is yet to play itself out, and hence the degree of uncertainty that we're going to have to grapple with?
You see, the uncertainty is more on the political side, Shiri, because immediately after this, the Brexit announcement, Scotland said we want to be part of Europe. Ireland said, not the Republic, the Northern Ireland said we would be part of Europe. Denmark said we want to be part of Europe. So there will be more countries wanting to strengthen the European system. So Britain is going to be isolated to some extent. But again, UK and Britain has a tradition of many years. It has a very strong financial center. Global banks and global institutions are all heavily invested in UK, whether it's resources, human resources, profitability in that country. It's used as a base for global. It's a global financial center. I don't think that is going to change. So I don't think UK is going to lose its financial status and will shift to Frankfurt or some other country. There's far too much of investments, and I heard the governor of the Bank of England, and he was very confident. He said that it's not, we'll support whatever is needed to be done, we will do it. As I said, it will take 2 years for it to finally happen. So it will be status quo for 2 years. Today being first day, the reaction is yeah, go ahead.
Perhaps exaggerated, as you pointed out. Let me ask you, sir, you were talking about countries that would actually like to join the European Union, but this also now brings to fore the debate that's been continuing not just in Europe but also in the United States with people like Donald Trump, and this tendency or the move towards more protectionism, a more protectionist approach, and what that eventually means as far as globalization is concerned, and whether globalization as we know it today is under threat. Are you concerned about that if we were to connect the dots?
Yes, I think there's a little bit of nationalistic movement going on around the world, whether you say United States. This was also a nationalist move that the people in Britain felt, given a choice. And mind you, it was a marginal victory. So I would say bulk of the people, 52% said we should leave, UK should leave, and 48 said we should not leave. So it was a very thin majority. And again, the poll output was only 71%. So the senior people, the older generation people wanted Britain to leave. The younger generation, if you see the trend, the younger generation wanted to remain in Europe. So yes, there is a little bit of nationalistic movement. Protectionism will come. Tariffs will be imposed by different countries. So the whole trade agreement between different countries will have to be reworked, re-looked at.
What would be the imperative now as far as India is concerned? And you pointed out that India is least vulnerable to what we're seeing play out as far as the UK is concerned. The macroeconomic stability bodes well for India. The RBI governor on CNBC TV 18 said that while the Reserve Bank will do whatever is necessary and appropriate, the government must also continue on its reform path. And the finance minister on CNBC TV 18 pretty much echoing those views that there will be no change in the direction or pace of reforms. What would be imperative from both Mint Street as well as North Block's perspective on dealing with this?
Well, Well, I've said it once already that I don't think it's going to, it's not going to change India's stance significantly. In any case, we have a strong political and business relationship, economic relationship with Great Britain, as well as France and Germany, which are the two largest economies in Europe. And that is going to continue. And I don't see any significant changes. It's just the first day, it is sentiment, it is overreaction in the global economy. So our markets and our foreign exchange markets have reacted. By the end of the day, it had come back. Half of the losses have been recouped. And if we were in a weak position in India, yes. But we are in such a strong position today because of low oil prices, because of reforms, because of everything, because all the macro numbers are very strong. So I think we can ride the storm very successfully.
We can ride the storm out. Mr. Parekh, appreciate you joining us here on CNBC TV 18. Thank you very much for your time and for giving us a sense of what you expect over the next few days as the Brexit result is digested by global markets. Thanks very much for joining us. That's Deepak Parekh there of HDFC, a veteran of many boom and bust cycles, as I pointed out, saying that India will be able to ride out the storm given the macroeconomic stability and given how strong our fundamentals look. It's an issue of context and an issue of timing, and at this point in time, India is certainly poised a lot better and, as we're pointing out, perhaps least vulnerable to what is going on in the rest of the world.